CapEx versus OpEx, which path to take? Choosing between CapEx and OpEx may have significant influence on an organization's purchasing choices. There are times when it is preferable to spend on CapEx. Purchasing and maintaining capital assets improves a company's financial stability. Apart from the initial cost, you don't have to pay for it anymore. Although initial capital expenditures are not immediately tax deductible, capital assets may provide future tax benefits over time. The worth of the equipment is depreciated over its lifespan. At the end of each accounting year, the depreciation cost can be claimed back. While it may not save much money on taxes, it does indicate a greater profit and asset value on the balance sheet that can be reported to investors. However, investing in equipment can't be reversed without incurring severe losses. If your company expects fast development or technological changes, OpEx is a superior option. Furthermore, here are some reasons why companies select for OpEx. The significant investment in fixed assets necessitates thorough budgeting and accurate predictions. Once you acquire the asset, you'll be trapped with it for a long time in order to improve its ROI. It's tough and complicated due to frequent technological improvements and future demand forecasts. Tips to help with CapEx planning. Figure out a CapEx budget. When you don't have a budget plan in place, CapEx projects can easily grow out of control. The capital spending ceiling, often referred to as the maximum amount an organization is willing to spend on acquiring, upgrading, or maintaining a capital asset, is the first step. This will assist in defining the CapEx budget. These tools utilize fact-based information to analyze current and future financial situations and provide you with realistic numbers. Split CapEx budget and annual budgets. Capital assets are generally budgeted separately by businesses. They have separate approval processes for both CapEx budgets and annual budgets, owing to the financial consequences and benefits that may span years or even decades in some cases. It necessitates careful study and analysis of the situation to assure that the correct CapEx decisions are made. Don't muddle the two. For many corporations, mixed operational and capital expenses are quite standard. It's critical to get it correct since the tax treatments for these expenditures differ. Many CapEx projects have operational costs, such as staffing and maintenance, which can be hidden in the CapEx budget, which is a sum of money dedicated to capital expenditures. Get your numbers right. It's irresponsible to guesstimate when it comes to capital expenditure. Without valid data, you can't build a realistic CapEx budget. It's critical to crunch some numbers through relevant software programs and arrive at reasonable ROI and other measurement numbers. Be transparent. It takes a lot of people from various departments to provide inputs for CapEx planning. You can never be sure that you're approving the most up-to-date version when you use emails for communication. It's crucial to establish a consistent review and approval process to ensure uniformity, as well as verify that the procedure isn't delayed. It's also critical to automatically route CapEx approvals based on predetermined requirements and capitalization restrictions. The differences. Capital expenses are big expenditures that will be used beyond the current accounting period in which they're made. Day-to-day operational costs are referred to as operating expenses. Each is dealt with in a distinct way, owing to its various features. OpEx, for example, is a long-term cost that is typically spent in the accounting period in which it was purchased. This implies that they are paid monthly, quarterly, or yearly following their billing cycles. CapEx expenditures must be paid up front in one lump sum. The time it takes for the return on capital expenditure to materialize, for example, in a new project, is longer than the time it takes for the return of OpEx, such as an employee's daily labor to generate their salaries. If a firm decides to lease rather than buy a piece of equipment as a capital expenditure, the cost of the lease is considered an operating expense. Did that all make sense? It can be a lot to take in at first, but it's important you understand all aspects of CapEx and OpEx. So take the time to get your head around these two important components.